and good morning, Eronmosele Aziba, for coming from Afrinvest. Thank you, it's good to see you. The industrial goods and stocks, what we're talking about, this is heavy brick and mortar we want to talk about. Brick and mortar.
Yes.
Let's leave coffee, tea, bread, pastries, and all of that. And talk about cement and construction. In this budget, about 2 trillion goes into capital expenditure,
yes.
and that means we're building roads, bridges, hospitals, whatever the government will be doing. So, in the industrial stocks have been growing on that news. It looks like they are shadowing that. Year to date, this sector is about 25%, 0.09. That's just around the same size. Oh, sorry, the index return on the broader market.
Yes, we can say that sentiment towards these stocks, likes of Danksem, WAPCO, CCNN, has been broadly positive this year. Like you mentioned, with the plan to expend about 2.3 trillion actually on capital expenditure, it's also going to be a positive for these stocks, and some investors might already be pricing this into valuation of the stocks, hence the recent appreciation that we've seen. But you also have to bear in mind the fact that these capital expenditure projects aren't short-term projects, right? So it's more of a medium to long-term. So any investor who is coming in now should probably be willing to hold a medium to long-term investment horizon on their investment.
I'm sorry to cut it. When folks decide to invest on news, market hearsay, sentiments, as you call it, what are they looking for? Present value or future value?
Well, I mean, if as an investor, if I'm investing now, it's because I believe there's some future value that will be added to my investment. So based on the news that I can see now, earnings reports of the companies and just generally news flows around, if they all tend towards a positive outlook for the stock, I would be willing to take a position now and hold and recoup and make my gains as time passes.
Look at one of the news over the weekend that the government has reached a deal with Dangote Group, technically Dangote Cement, to rebuild the Apapa Ports Road. That's massive. That's several millions of dollars, multi-billion naira project. And this is not going to sound like a bit of a commercial, but no, I'm trying to find a way not to get a debit note when I'm out of the studios. But this is one stock that folks who are big-time players will be watching very closely, Dangote Cement, because of the Apapa Road, Apapa Port road construction in the news.
Well, I mean, yes, it's going to be positive for the stock, for general sentiment around the company as a whole. But we also have to bear in mind that this is a fundamentally sound stock, as in buying into Dangote Cement, consistently churning out impressive numbers, expanding operations across Africa, which are all generally positive. I mean, stock accounts for about 30% of market capitalization, which and we've also seen some interest in the stock, and this shows you that it's actually a fundamentally sound stock that investors can take advantage in. So this news flow that's coming out, the agreement between Dangote and the federal government, is also a positive for the sector. And I mean, and for those who apply the route, it's also generally positive for Nigeria as a whole.
Yes, if you look at these cement stocks, aside Dangote, we've seen a bit of an uptick also in even smaller cap cement makers like Cement Company of Northern Nigeria, basically sitting over there somewhere in Sokoto State, I guess.
Yes.
And within that region, within the northwest part of Nigeria, you find CCNN holding a bit of a market share that's perhaps not totally within the grip of Dangote Cement. And that means that, look, one good news can just spread across.
Yes, it can have a ripple effect across the sector. Like I mentioned, with the plan for to increase capital expenditure in the 2017 budget, it means there's going to be a lot of construction that's going to be going on. We probably won't see just one of these cement companies get all the contracts. So it'll probably spread across the various companies that operate in that sector, and it's generally positive for the sector.
We'll talk about the cement. What about the construction? We have a few of them in our market, just a handful. Julius Berger, of course, the kingpin in that space, and maybe just only one or two others. Do you think the construction folks would also, one way or the other, benefit from this?
Yes, they should benefit from it, even though Julius Berger that you mentioned is actually down year to date. But I think once some of the projects start to kick off, we should see sentiment towards this stock actually improve.
If I've been holding Dangote Cement, Lafarge Africa, CCNN, Ashaka Cement over a period, 1 year, 2 year, 3 year, 4 year, maybe 10 years, and I see this news and price move, how soon do you think perhaps it's reasonable for me to say, look, I'm going to say, hey, folks, write me a check?
Well, it all depends on what the investor's investment horizon is. So if you're in for just capital gains and you've sort of made up your mind, okay, I just want like a 20% gain. Once you've made that your 20%, you're willing to sell out. But clearly, there's still potential for gains. So it's all dependent on the individual investor and what your appetite for risk is. Obviously, the longer into the future the investment stays, the higher the risk. But again, the bigger the risk, the bigger the reward. So, you know, it's all dependent on the individual investor.
If I'm asking Afrinvest to write me a check and sell down my portfolio or for the industrial goods for cement companies, are there folks who are willing to pick it up?
Well, yes. I mean, liquidity is out there for investors who want to buy into the stock. So yes, I mean, for the big players, you have Dangsem, you have WAPCO. These are very liquid stocks that you can take position.
Look at what Lafarge Africa has been buffeted over the last few years. Now the company's made a couple of announcements that they're coming back on the market. They're doing a rights issue. Lafarge Wholesome says, look, we're not going to dilute our rights. We're going to take the whole thing. That's from the majority shareholder in Lafarge Africa, listed on our market. What sense does that tell you about, one, the confidence in the market and outlook on Nigeria's economy from the industrial construction infrastructure point of view?
I think it's generally positive. It sort of shows that they have a positive outlook in the sense that they aren't willing to exit now. Instead, cement their position in the stock, and it's generally positive. We know that the company went through a tough time in 2016, churning out largely not so impressive results up until Q4 2016. So prior to that period, prior to the release of their reports, we saw how investors punished the stock, going from as high as about 100 naira thereabout down to about 45. And following the release of the result, we've seen some traction in that stock. So even in terms of looking at investors who want to take a short-term position in the industrial goods sector, looking at current pricing, WAPCO will probably even be the best opportunity for short-term investors because we still see a lot of potential for growth in the short term. Even with the pricing? Even if I can't chase Dangote Cement at such a price, maybe I have enough cash to chase a stock like Lafarge. Yes, so that's generally the ripple effect that we've been seeing, similar to the banking sector. So for investors who couldn't take advantage of some of the tier 1 stocks, we saw significant gains in some of the tier 2 counters, as there were some investors that were willing to take this up. In terms of when you see industrial stocks move, and these are companies that are very large, and you can't discuss Lafarge, discuss CCNN, Dangote Cement without discussing the banks. Of course, these are the guys who put oil in the engine of the market. So one way or the other, you think this will trickle into the banks as well because they are the big boys who bring in the big money. Well, yes. I mean, increased flows into the market, financing some of these operations. So it's also going to be, generally, it's going to be positive for majority of the sectors as a whole.
Yeah, again, because insurance folks will also have some benefits there, because if you're going to construct massively
You have to
rails,
insure,
roads, and whatever,
yeah.
you need to insure all the assets. So premium will also go higher. It's a good time to be in business if this really go as planned. But let's leave it there for today, and it's good to have you to start the new business week with us.
Dawson.
Thank you, Eronmosele Aziba, who is one of the investment analysts at Afrinvest. Talk about the